it's going to lead to a situation where gold's value in its own right, and I'm not talking about measuring it in dollars or euros or anything, gold's value in its own right looks set to rise. And that is going to accelerate the dollar crisis, in my view. I mean, already, and I think I made this point on your show before, and that is that as far as the Bank of China is concerned, they're not in there buying gold; they're getting rid of dollars. Yeah. I mean, they know these guys aren't idiots. They can see what's going on. They can see that America is in a debt trap. They can see exactly what's happening. So they just want to basically get rid of dollars, and they've not only been selling dollars for gold, but also for copper. They've been stockpiling other things as well.
Gold is gaining support after data from the World Gold Council on Tuesday showed China's net gold imports rose by 17% in July, the first month of increases since March. A modest increase in net inflows of 8 metric tons, $403 million, led by North American funds last week, was also noted. Industry officials said gold demand in China will improve in the coming months as consumers adjust to higher prices. Economic uncertainty and concerns about currency weakness are driving investment flows. Alasdair Macleod is the head of research for Goldmoney, a leading global provider of precious metal investment services. While highlighting the rise in gold's intrinsic value, he notes that the PBOC is buying gold and shedding dollars. He foresees China won't pursue global reserve status without a gold standard, unlike America's approach. In 2010, less than 1% of China's cross-border payments were settled in yuan, compared to a staggering 83% in US dollars. Fast forward to March 2023, and a pivotal moment occurred. The yuan overtook the dollar for the first time. By March 2024, over half of Chinese payments were settled in yuan, doubling its share remarkably in just 5 years. From a technical perspective, Macleod asserts that China has likely amassed more gold than officially reported, strategically boosting mining and restricting exports since 1983. He compares this to a Hotel California situation, where gold enters but doesn't leave. China's gold reserves amount to 1,948 metric tons, ranking 6th globally. The PBOC manages these reserves, which are stored nationwide. China's gold reserves are valued at approximately $115 billion. In supporting his current thesis, Macleod emphasizes that China and Russia recognize gold as true money, while other currencies are merely credits. Now, we present the clips of Alasdair Macleod's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I think there's one fallacy behind this idea of 100 years, and that is that it's really what you're looking at is the rise and decline of empires rather than currency. Because until Bretton Woods, basically currencies, international currencies were backed by gold to a greater or lesser degree. So really, this is, with the Americans' dollar, this is the first time you've had a currency lasting for decades without any anchor in terms of value on an international basis. Okay, so this is very, very different. I think that from China's point of view, it makes no sense at all to take on that mantle. In other words, the next fiat currency, if you like, which the world uses. I mean, I don't know what their thinking is, but I would, if I was asked by the Chinese what my view is, I would say, put it on a proper gold standard. Then it really doesn't matter, because the future of your currency in terms of how it's used and all the rest of it will come and go with your influence around the world, not with the management of your currency, which is really where America has gone horribly wrong. And this is why I think China has accumulated a lot more gold in secret than publicly declared as reserves on the People's Bank's balance sheet. They've been doing this since 1983, when legislation was put in place for the People's Bank of China to operate in markets, acquiring gold and silver on behalf of the nation, the state, the Communist Party, whatever. And ever since then, they stepped up their mining output and rapidly became the world's number one gold miner by output, stepped up the refining, which they kept very much under state control, and banned effectively any exports of gold. So it's all been accumulating. I mean, I say it's sort of China's Hotel California for gold. You go in, but you can't get out. Yeah. And that's basically what happens. It's the only sort of small window in there is Hong Kong, and that is it allows visitors from the mainland to go into Hong Kong, buy gold, jewelry, small ingots, whatever, and carry them over the border. And they're just allowed to do that. And it allows them to evade any sales tax on gold jewelry. So that's about the only loophole in it. But again, you see, it's all about getting the gold into China. They've even advertised for their citizens, go and buy gold, it's good for you, or whatever the byline is. So they do understand that gold is money and the rest is credit. The Russians understand this as well. And I think the only reason that they haven't started putting their currencies onto gold standards is they don't want to be blamed for bringing down the rest of the world, which is essentially what would happen if they did that. I mean, just imagine what would happen to the faith and credit in the US dollar, in the euro and all. I mean, the euro could put itself on a gold standard because some of the major countries actually do have substantial reserves, but they wouldn't be able to do the other thing, and that is contain the spending, because you can't go on a gold standard without containing government spending. I mean, where the Americans went wrong, if you like, leading up to the collapse of the Bretton Woods system was, that gold sort of meant that prices did not rise that much in the post-war years. But the expense of that in terms of growth of GDP, because the growth in GDP, it multiplied something like 6 times over that period. The growth in GDP basically meant that the other side of the price stability was the gold reserves were running out. You can't inflate your credit without an effect on prices. Now, if the prices are anchored to gold, then what happens is the gold disappears. It's actually as simple as that. And that's basically what America did. So you must contain spending.
During the interview, Alasdair Macleod explains that gold's purchasing power is set to rise as paper currencies decline. He notes that in China, significant savings are shifting into gold accounts, driving up demand for physical gold and leading to increased withdrawals from COMEX. Seasonal demand is expected to pick up later in the year in China, with strong investment interest in gold persisting due to economic uncertainty, concerns about currency weakness, and its appeal as an alternative asset given the protracted downturn in the country's property sector, according to UBS strategist Joni Tvs. Regarding wealth preservation, he concludes by noting that China is also stockpiling silver, which is crucial for its technological advancements, and observes that other countries like India follow suit, mainly due to their growing solar panel manufacturing industry. India's silver imports are set to nearly double this year, driven by increased demand from solar panel manufacturers, electronics producers, and investors seeking higher returns compared to gold. As the world's largest silver consumer, India imported 3,625 metric tons last year. Let's get back to the interview.
The value of the gold broadly remains the same. It's the value of the paper currency which is declining. And I think that's the important thing. Having said that, when you get a flood of people going out of the paper currency into gold, then the value of gold in terms of its purchasing power, measured against particularly commodities, for example, that will tend to rise. So pure supply and demand. And I think, this is something which I don't think has been fully appreciated in bullion markets. If you look at China, household savings run at around about 35% of GDP. That's $6 trillion. $6 trillion every year, no longer going into property, not really attracted into the stock market. It's just going into deposits on banks' balance sheets. Now, banks also by law in China have to, or regulation probably rather than law, have to offer gold accounts. This comes back to the whole of the gold thing. The Chinese government are preparing their population for this. And these gold accounts, basically, if you've got 500 yuan, maybe 600 yuan, you can open a gold account. So less than $100 equivalent, you open a gold account, and that account is denominated in gold. It's basically an unallocated account as I see it, but what it does is it leaves the liability with the bank with a gold liability. So what does it do? It has to go out and buy gold in the market in order to have it. The idea that you can back these customer accounts with paper gold, is actually severely limited. And this is what's now happening. This is the drain of gold coming out of our markets is actually increasing. One of the things I monitor is the withdrawals from COMEX. And every day, pretty much, there's significant withdrawals coming out of COMEX. And we're talking about, not small quantities. over a month, it can be 250 tons, for example. And then there is the other side, which you can't immediately see, the exchange for physical. Now, what an exchange for physical is, it's an exchange of a COMEX contract for a London forward. So why would you exchange a COMEX contract for a London forward? Well, the answer is that you sell your COMEX contract, you buy your London forward position, and then you take delivery. So here again, you can see how gold is sort of running out of the system. It's going to lead to a situation where gold's value in its own right, and I'm not talking about measuring it in dollars or euros or anything, gold's value in its own right looks set to rise, and that is going to accelerate the dollar crisis, in my view. I mean, already, and I think I made this point on your show before, and that is that as far as the Bank of China is concerned, they're not in there buying gold; they're getting rid of dollars. Yeah. I mean, they know these guys aren't idiots. They can see what's going on. They can see that America is in a debt trap. They can see exactly what's happening. So they just want to basically get rid of dollars. And they've not only been selling dollars for gold, but also for copper. They've been stockpiling other things as well, other commodities, and even grains. I think wheat they've been stockpiling, according to reports. They've also been accumulating silver. Silver is so desperately important to their technologies. Yeah. That's definitely been accumulating, but they've been doing that for some considerable time. And on top of that, of course, we've now got other countries accumulating silver. India, they're getting into the solar panel solar manufacturing, and what's required? Silver.
However, gold's medium and long-term trends remain bullish, which, given the trend is your friend, the odds favor an eventual breakout higher materializing. Commerzbank's commodity strategist Carsten Fritsch argued in a recently published report that gold has no significant upside potential in the near term. How will the ongoing shift toward precious metals impact global financial stability and investment strategies in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.